This video shows how Charge Manager makes the complex and time-consuming task of collating Section K data as straightforward as possible. The Section K report is a new part of the RMAR which was introduced this year, and it's the way in which the FSA is going to monitor how advisor charging is actually working. The data is required to be presented in a number of ways. First of all, the split between independent and restricted advice, and then how the charges are actually invoiced, either directly to clients, or through providers, or through platform service providers, both for independent and restricted. You then need further splits around the revenue that is derived from initial advisor charges, from ongoing advisor charges, and a total amount. Again, these are invoice charges as opposed to revenue received. You also need to provide the number of lump sum payments and the regular instalments as a proportion of the total. So this is a proportion of the regular instalments that have been paid off during the reporting period. If you have a lot of regular premium business and you have clients that are paying you in instalments for the initial advice, then this is a particularly complex task to undertake, and the FSA has a specific way in which they want this recorded. Charge Manager will make this very easy for you because it picks up the data as you go along. And then it requires a total number of payments here, and the number of one-off advice services split between independent and restricted. The Section K report is required for all firms reporting after the 1st of July 2013. Many firms will have a reporting period in September. That means that you have to start to collect your advisor charging data from the 1st of April. You're able to set the reporting dates here, and so that because the RMAR is cumulative, you can account for that in the reporting date selection. There is also a print preview button here which shows how the data that we're collecting here is placed into the exact report that the FSA requires. One of the main benefits of Charge Manager is to give you a structure for your charging and to give you a very clear framework within which your advisors can operate. It's essential that these processes are followed because this is the way in which Charge Manager is able to help you collect this information. If you leave it until the end of the reporting period to draw this together and you haven't got a clear charging policy, or the advisors are not implementing it correctly, it's going to be very difficult to gather all of this data. So a major benefit of Charge Manager is the significant amount of time it will save you in collecting the data. In addition, it will give you accurate data, and it will make sure that this part of your RMAR return is relatively painless to complete.